What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. That means it's time for the FAANG Stock recap show here on the Investor Channel, where every Friday we recap all the major news of the week and the technicals from all the major FAANG stocks. You might notice a small echo here. We are at the cabin for Masters Week. Let's kick things off like we always do with Facebook. Started the week at 229. Like all of these stocks, pretty much all slid down to about $222 per share. Qualcomm turned positive amid reports of Meta Platforms chip struggles. So Meta Platforms, just like we're seeing with Apple as well, they started this new silicon division. They're trying to design their own chips, and they'll likely use like a TSM or maybe even a Qualcomm to help them manufacture those chips. Well, they're having trouble over at Facebook manufacturing these chips or kind of coming up with the design. So it appears that they're going to use a Qualcomm chip for their upcoming Ray-Ban smart glasses set to release next year. Certainly from a technical perspective, as a side note, Qualcomm's starting to look a little bit interesting. We'll cover their earnings here in just a couple of weeks. Facebook's Mark Zuckerberg looks to create his own virtual currency for the metaverse, referred to internally as Zuckbucks. We'll see what the actual name of these ends up being, but this is akin to if you play video games and there's kind of a digital currency on those, typically a similar type of thing. It doesn't look like this is going to be a part of like a blockchain technology or like a cryptocurrency, but it appears to me that they're developing their own tokens inside Facebook and certainly maybe Instagram and WhatsApp as well that could be exchanged. Certainly from a cross-border perspective, exchange rate perspective, could be a interesting platform. Facebook's parent Meta Platforms cancels this year F8 developer conference. This comes from a quote similar to years past. Facebook is taking a brief break in programming and will not hold its F8 in 2022 while Facebook gears up for new initiatives that are all tailored toward the next chapter of the internet and the next chapter of Facebook as well, including building the metaverse. So they're taking a break from that. Moving on to Apple, start of the week at 176. Like a lot of these stocks, just continues to head down to about $170 per share. I tell you what, next week will be interesting to see if these stocks continue the downward momentum or if they bounce, depending on which way they go. Boy, they could go pretty strong in one direction or another. iPhone estimates were cut over at JP Morgan, but higher market share can help Apple. So they're thinking that the number of phones that are being sold will likely come in line or just under estimates, but that Apple might have a larger share of the market, and we'll see what happens there. Now, iPhone ownership, intent to buy near record high for teens. A survey by Piper Sandler found that 87% of teens surveyed either intended to buy an iPhone or already owned an iPhone. Certainly bullish news for iPhone heading into the future. Moving on to Amazon, start of the week much higher, $3,302 per share. Is that right? All the way down to about $3,090 per share. Broke through a critical area of support. We'll talk about where Amazon is heading from a technical perspective here in a moment. Now, Amazon is on watch after putting a number of unionization pushes. The one that went through, we saw, I think in the New York area, that one actually went through. It appears that each fulfillment center or kind of region of fulfillment centers will likely have to form their own union. Doesn't appear that maybe they'll get like a nationwide thing. Now, on the surface, could be seen as a negative for Amazon, but as we know, Amazon is not only in competition with like a Walmart, a Target, and certainly a number of other different retailers out there as well. They're not only in competition with the products, they're actually in competition for labor, especially kind of that entry level, like minimum wage or just slightly above minimum wage labor. Well, look, a union could end up making Amazon's competitiveness inside the labor market actually better, and that could crimp Walmart, it could crimp Target, and the other types of stores that might not have as competitive wages and benefit system that Amazon might come in. And that's the incredibly bullish side of the argument. Obviously, unions tend to bleed companies in terms of their financials. We'll see what happens with Amazon. Moving on to NVIDIA. Hello, downtrend. Started the week at 268, ended the week at about 231. A lot of bearish articles coming out about NVIDIA this week as they led the declines as Truist finds hard evidence of order cuts. This is not necessarily the most the upcoming quarter, so like Q2. They said not even really into Q3. They're not really seeing order cuts. They're really seeing the back half of the year, probably tail end of Q3 into Q4, they're starting to see evidence of actual order cuts from chip makers or chip buyers of NVIDIA. And they say that they're not sure if this is a temporary order cut or if this is something that will be a little bit more prolonged. This is a new trend that all of a sudden we've got this kind of pull forward in demand for all these chips, and now demand is likely to wane in the coming weeks ahead and months ahead. Intel's new GPU shows promise, but NVIDIA still has an advantage. Again, this is according to analysts. Another reason that NVIDIA might be seeing a little bit softening demand is the fact that you do have competitors out there like Intel, which are releasing new products. Certainly will keep an eye on that as well. Moving on to Netflix, started the week at 374, ended the week at 355. Netflix and the NFL are talking about teaming up on some football shows. This is on the heels of the success of the Formula One show. They also had the Chicago Bowl docuseries. They also have a PGA Tour show in the works, among others. It looks like the NFL is looking to tap Netflix, certainly bullish for Netflix. Now, smaller, we'll put that in quotes, smaller sports may become next shopping target for big streamers. We're talking about Formula One. We're talking about NASCAR. We're talking about the UFC. We're even talking about the WWE and a number of other different leagues out there. Certainly Netflix hasn't dipped its toe fully in the water of like live sports. They're certainly involved in these kind of documentaries and kind of the series that follow like a season or a team or something like that. It'll be interesting to see if Netflix kind of pivots into the actual showing of live sports as well. Now, Netflix's Q1 subscriber ads tracked above estimates prior to the company pulling out of Russia, so we'll see how they end up. Netflix does report their earnings on April 19. Those will be very closely monitored. We'll talk about Netflix from a technical perspective here in a minute. Now, I apologize last week. I totally messed up. I missed out on the Google news. I looked back. There really wasn't any significant news other than that Waymo actually started their driverless car service in San Francisco. They've been testing that in Arizona, and now they're up and running in San Francisco. That was the news from last week from Google. But they started this week at about $2,848, slipped below, just like Amazon, kind of an intermediate area of support, slipped down to about $2,665 per share. Fastly, which is a publicly traded stock under the ticker symbol FSLY, they gained on a very vague speculation it could be a potential Google target. Now, we've covered Fastly here many times here on the channel, and I have not minced words against the management of this company. They've done a terrible job when you look at the financials of their company. Now, they might have a great product. It might be a very useful product, but from a management perspective, in terms of driving profits for shareholders, management could not have done a terrible job. In fact, the stock is all the way down to $18 per share. I'm talking about Fastly. This would fit the Google playbook of acquiring kind of the plumbing of the internet. They've acquired API companies, obviously cloud computing companies. They've done software security and internet security companies. This is kind of the plumbing of the internet. Certainly would fit in with Google. We'll see from a regulatory perspective if they could get a deal like that done. Google announced its self-repair program for its Pixel phones in collaboration with iFixit. This is aimed at kind of a niche market that wants to replace maybe the screen or the battery or maybe something broken on their phone. Just something, a minor market in my opinion. Moving on to Netflix, started the week at $313 per share and was not immune to the declines. Ended the week at $297 per share over at Microsoft. Now, Microsoft disrupt Russian hackers from targeting the Ukraine, the US, and the EU. They essentially took, it was really interesting. They had a court order to take control of domains to mitigate the hacking attack, and that's an interesting strategy, and it certainly looks like it worked, at least in the shorter term. Boeing has tapped Amazon, Microsoft, and Google for a cloud mega deal. This is to transform Boeing's internal systems and their software development tools. It'll be interesting to see. Now, to each of these companies, Amazon, Microsoft, and Google, probably a small tangible benefit in terms of their revenue and their profits and whatnot. But what this probably has a larger thing, if Boeing can really show success with this, certainly would trigger maybe more corporates going this direction, turning a lot of that cloud computing support over to these three large companies. Now, the FTC is analyzing that Microsoft and Activision deal to examine consumer data, labor market impact. I mean, they're going to go through this with a fine-tooth comb because they don't really have a lot of other things to do over at the FTC. They're going to go through this deal since it's the largest one on the table. They're going to make this as difficult as they possibly can on Microsoft. We'll see if Microsoft prevails or not on that one. Moving on to Tesla, start of the week at 1,077, end of the week at 1025. Block, which used to be formerly known as Square, Tesla and Blockstream to mine Bitcoin with solar power. So essentially Block and its Blockstream subsidiary, I think, unless those two companies are separate, they are going to build solar and battery powered Bitcoin mining operations in Texas, and they're going to use Tesla for that solar and that battery operated power. Certainly could become a new kind of wheelhouse for Tesla, or a new use case, probably a better way to say it, for their battery and their solar technology. Now, Tesla's delayed Cybertruck will go on sale in 2023. Now, we have heard that it was initially going to go on sale in 2021, and then it got delayed until 2022. We heard on last conference call that they weren't going to build it this year, looking like next year for the Cybertruck. Now, that is a big release for the company. It was planned at about a $39,000 car. I'll show you here in a minute that the Model 3, which is kind of the entry-level car for Tesla, has just creeped up in price. My guess is you're going to be closer to probably $75,000 or $80,000 on this Cybertruck. Certainly will be interesting once that car comes out. I certainly have one on pre-order myself. Now, speaking of those price increases, Tesla boosted its prices on its Model 3 long range and its Model 3 performance model by $1,000 and about $1,500 on that long range model. So the base Model 3 long range went from about $54,000 up to closer to about $56,000. The Model 3 performance, was kind of the faster model, went from about $62,000 all the way up to very close to $63,000 per car. Certainly getting really expensive, even for kind of your entry level Tesla. Now, Twitter surged this week 30% as Elon Musk takes a big stake, about a 9% stake in the company. And some of you might be wondering, well, this is just a side thing for Tesla. This has nothing to do with Tesla. And I actually think it's a little bit different than that. I actually think Twitter is akin to Jeff Bezos buying the Washington Post. So as we know, Jeff Bezos, the former CEO and founder of Amazon, bought the Washington Post really to get political influence in Washington. I think the same thing could be here true with Elon Musk. He is buying Twitter, which has as much influence on politicians as virtually any other social media site. And so I actually think this is a very interesting move by Musk that could allow him to have a bigger seat at the table in Washington. And one example of that is a high-level EV battery charging meeting with the Biden administration is going to include Tesla's Elon Musk and GM's Mary Barra. So we'll see what happens here with Elon Musk and Twitter, but I think it could give him even bigger political influence than he already has today. Certainly could benefit Tesla in a lot of ways, quite frankly. Tesla is falling again as the Shanghai, China factory closes again due to a COVID lockdown. This is certainly something that we're going to likely see for the time being when it comes to China and that situation. Moving on to the technical segment of the show, we'll kick things off with Facebook. So this one's doing something that we pretty much thought it was going to do. It walked its way up here over $220 per share. We talked about numerous times on the show. The initial drop was about $240-ish per share over at Facebook. Huge volume. And so we expected some turbulence when we got into this range, the 235, 240. Sure enough, we hit our head on that, and Facebook pulled right back to an area of support here at 222. Now, this is the technical case for virtually all these stocks headed into next week. A bullish move would get us back over the previous highs, which are right now sitting at Facebook at about 235. You get a move there, I think you're almost guaranteed to retest up here at 240, okay? Because this would just signal, sellers were just a very, very temporary, sell-off here just over the last couple days. Now, if the opposite happens, we come here and we break below 222, well, I tell you what, I think we're going to make a much larger move to the downside on Facebook. I think you have a high probability of getting south of 200 on this one. That could be, in my opinion, your buying opportunities. Your buying opportunities with Facebook are actually, quite frankly, a break above 244. We have to keep in mind that earnings is coming up on April 27th. We might not see that break out or the break below before that. We could see some choppiness heading into that. But I personally wouldn't really love this one until we broke above this area of resistance up here at 245, or all the way back down here at about 196, 197. I could see taking a shot down in this area down here with Facebook. Moving on to Apple, somewhat similar situation to Facebook, except we're, within within the stone's throw of all-time highs over at Apple, but similar setup as we head into next week with Apple. So we broke through this intermediate area of support. I mean, it's a real thin area at 175. We broke through it. Now we're working our way down here to about 167, 165 or so. You can always plus or minus a couple dollars on any number that I shout out. I really should put like zone boxes. There's guys here on YouTube that do that. I want to make these charts as approachable as I possibly can and not clutter them up with a lot of boxes and stuff. But essentially down here at 167, we should find some support, very thin layer of support over at Apple. Now, two things can happen with Apple next week. We get a burst back up above the highs. If you get above 175 on this one, I think it's a pretty high probability you come back up and retest the highs in the 180s. Now, if we continue our momentum down, I think it's almost assuredly we hit here at 167. You break 167, and I think you have a much farther way to fall with Apple. I think you could retest this lower trend line, wherever that happens to be, probably south of about 165 over at Apple. Moving on to Amazon, we talked about how this one has broken through kind of an intermediate area of support. We have this intermediate area of support, which has been there forever, basically, at $3,185 per share. I'll zoom in here. You will see how we kind of broke through that on this week's downward trend. And now we're heading to an area where Amazon has been many, many, many times before, essentially south of about $3,000 per share. You get that south of about $3,000 per share on Amazon, and that can trigger a buying opportunity. A break back to the upside wouldn't excite me unless you broke back above the previous set of highs here at about 30, we call that close to 3,400. You get above that, I wouldn't be that excited because we have our upper trend line here, which would be in a significant area of resistance up here closer to $3,500 per share. If you're not in Amazon and you want to, I would just be patient here. I think you probably have lower prices heading your way with Amazon. Moving on to NVIDIA, made a big downward move over at NVIDIA this week. I mean, this was a several red candles and pretty dramatic, okay? A lot of it had to do with the news that we talked about, how we're seeing maybe a slippage in demand in terms of NVIDIA's products. It's pulled back to almost an area of support down here at about $228 per share. Certainly from a rounding perspective, you're right there at about 231. We don't have earnings until May. This company reports much later than the rest of the FAANG stocks, and so we don't have earnings for quite a while with this company, and so I think the negative momentum could continue. I think you could find some support here at 228. You get a bounce here. It still maintains this uptrend that we're trying to form here. You get a bounce and the stock moves upwards. Well, it's showing you that, yes, we're still in a shorter term uptrend. If we break this level at 228, I would consider that a pretty significant level. And then obviously you're going to continue to head downward. I think you're going to come down here to about this 210 level. If the momentum continues down with NVIDIA, I think you have a strong probability of pulling back into our sideways consolidation box down here south of about $155 per share. That would be a very interesting level from a technical perspective, but also from a fundamental valuation perspective when it comes to NVIDIA. Moving on to Netflix, this one's doing exactly kind of what we want. I want to get into this stock. I want to get into it at a pretty good price, and it is making a move here back down. It found an area of resistance up here at 380. It's pulled back to about 356. I could see this one retesting these lows that we made back in March down here about 330. I tell you what, you retest these lows, takes a little bit of courage to buy it down at these levels. It is the area of support. We do have earnings coming up on the 19th with Netflix. That could complicate things from a technical perspective. That's why I wouldn't be like really rushing into this one. If we retest down here south of like, call it 340 next week, I wouldn't like really be excited because we have earnings the following week, and we tend to see with Netflix, when you have earnings, this thing is gapped up, it's gapped down after earnings, and so a little bit risky in that sense. And we'll see what happens with Netflix. Could be some high volatility heading over the next 2 weeks. Now, Google, much like Amazon, has gone sideways, hasn't gone sideways for quite as long, and had a mega uptrend before that, but it broke an intermediate area of support that we have marked out here in this green line at about 2750. It broke through that, so it's a high probability that Google comes down here and retests south of, I'd say, about 2600. You get south of 2600 on Google, certainly can be a buying opportunity. If we reverse here and we go higher, like especially if we get above 2800, I think it's almost guaranteed that you retest these highs up here at about $3,000 per share. Moving on to Microsoft, also also broke through an area of a little bit firmer area of resistance and support. We broke through it at about 305. We're sitting here at about 295. If you continue to work down, you've got areas obviously south of about 290. I think could be interesting buying opportunities for Microsoft. And same thing with like these stocks. If we get momentum next week, the buyers start showing up, we get above 310, I think you've got a high probability, not necessarily, and I'm not talking about next week and even maybe the following week, but within, I would say, you know, a short period of time, maybe a month or two, I think you'd easily retest these highs at 350. Really, I think we're going to get confirmation next week whether or not these are uptrends or if this was just kind of a short-term bounce with these stocks and they've slowly started to pull back. Similar story with Tesla, has made a monster move off the lows. We're not really concerned with this one. Again, we can't really point to an uptrend or a downtrend at this time. In the shorter term, all of these stocks, quite frankly, for the most part, with some small exceptions, are in a much shorter term uptrend, and they've started to pull back. With Tesla, a pull back to an area of support here at 910 could create some buying opportunities. Anything south of there, also a pretty good buying opportunity. You start retesting lows down here south of about 800, I think could also be a buying opportunity with Tesla. You get a reversal with Tesla next week, and I think it's almost guaranteed you retest the highs, not necessarily to the dollar, but you get pretty close to about 1200 over at Tesla. That was the FAANG Stock recap show for this week. We'll be back. A lot of you have been wondering, where have the videos been on the investor channel? It's not that I'm slacking. It's not that I'm spending a bunch of time with my family, although I am doing a lot of that, is because earnings season essentially starts next week, and that is our wheelhouse over at the investor channel. So stay tuned to the channel. We'll be covering earnings next week from all the major bank stocks, and then obviously the tech stocks follow that. Should be an eventful few weeks here on the channel. Hopefully you guys have a great weekend. We'll be back again soon with more. Good luck with your investments.